Today, we're talking about the future of Bitcoin and its price, or what it might be. To understand how Bitcoin might rise to power, here's how the US dollar and fiat currency rose to dominance in 1, 2, 3 acts. Act 1, Bretton Woods. No currency has had a greater dominance in modern history than the US dollar. The reason why goes back to 1944. While World War II was still raging, delegates from 44 allied nations signed the Bretton Woods Agreement. Under Bretton Woods, gold became the basis for the US dollar, and other global currencies were pegged to the US dollar's value, making the US dollar the world's reserve currency. At the time, the US accounted for almost 40% of global GDP and almost a fifth of global foreign exchange reserves. Today, the IMF estimates the US accounts for roughly 16% of global GDP, but over 60% of foreign exchange reserves. If this sounds like the US greenback's role as the world's reserve currency is under threat, trust your instincts. Act 2, the Nixon shock and the rise of fiat currency. The dollar's fall from grace may have started as far back as 1971, when the Nixon shock severed the direct convertibility of US dollars into gold. Nixon's move decoupled the US dollar from gold, ushering in the era of fiat money. Fiat money has two important traits. One, it isn't backed by an underlying commodity. And two, it is centralized money, meaning control of how much of it is printed is determined by a government. Being a fiat currency and the world's reserve currency bestowed America with one of the greatest privileges an economy can have: control over its economic destiny to a point. The U.S. could easily finance its trade, budget deficits, and pay its debts because they controlled the supply of the currency. And through its own monetary policies, such as quantitative easing, the U.S. could influence the value of the dollar to gain a competitive advantage relative to other economies. Case in point, Trump's enforcement of economic sanctions against Iran effectively shut Iran out of the international banking system. Richard Nixon's Treasury Secretary, John Connally Jr., said it best: "The dollar is our currency, but your problem." Act 3, Cronyism and the rise of Bitcoin. For decades, we've embraced rugged individualism and capitalism on the way up, privatizing the gains, and then cronyism on the way down as we socialize economic losses with stimulus, better known as bailouts for corporations. And who facilitates the bailouts? Central banks. In response to the pandemic, the Federal Reserve started buying up assets to prop up the stock market, growing its balance sheet to a record high of $7.5 trillion. In other words, our national character, our complexion as a nation is the following: hundreds of thousands of Americans dying is bad, but what would be tragic is if the NASDAQ actually declined. The Fed funds this by printing more dollars, expanding the money supply. Aggregate money supply jumped from $15.3 trillion in January 2020 to almost $19.5 trillion by December, up roughly 26% in just 1 year. The last time money supply grew this fast was, and you guessed it, World War II, when annual growth peaked at 27%. What this may eventually lead to is inflation. Inflation is the decline of the purchasing power of a currency and happens when more dollars chase the same assets, driving prices higher. Now, to be fair, I don't know, nor do I think anybody else really knows, if inflation for consumer goods will occur. And a case for a deflationary cycle may carry water as well. But borrowing off your own money supply machine is like getting high on your own supply. It's a hard addiction to shake, it's temptation, and it generally doesn't end well. So, how do investors protect their assets and hedge themselves against cronyism and the great monetary inflation? They seek refuge in safe haven assets. Historically, that was gold, but in the future, that might be, you guessed it, Bitcoin. Similar to gold, Bitcoin cannot be created from thin air and must be mined. Bitcoin miners receive Bitcoin as a reward for using tremendous computing power to solve complex mathematical problems that verify transactions. However, distinct from gold, Bitcoin isn't a commodity. It's a protocol, a series of defined procedures, and one of those procedures stipulates there will only be 21 million Bitcoin that can ever be mined. So gold is a scarce asset as well. Why not just load up on the heavy metal? Because Bitcoin may have some advantages over gold. First, there is no way to independently verify the total gold supply. With Bitcoin, anyone can verify the entire Bitcoin supply, and that supply is fixed by mathematics and code. Second, it's hard to verify if gold is real. King Gold Jewelry is listed on the NASDAQ and is one of China's largest jewelry companies. It used 83 metric tons of fake gold, a fifth of China's annual gold output, to secure a $3 billion loan, crushing the stock and forcing it to delist. Fake gold has even made its way into the vaults of JP Morgan. On the other hand, Bitcoin allows for immediate verification and full auditability of its transaction ledger. Another big problem with gold, it's difficult to store, transport, and divide. While physical gold needs to be melted to be divided, Bitcoin is easily divisible. The smallest unit is a sat, short for the name of Bitcoin's founder, Satoshi, and is equal to 100 millionth of a Bitcoin. But of course, Bitcoin isn't without its flaws and its criticisms. The first, volatility. As a relatively small asset class, Bitcoin's price is highly sensitive to news, trading activity, and market manipulation. Bitcoin is also touted as an uncorrelated asset, but that hasn't been the case. In fact, the price of Bitcoin and S&P has become increasingly correlated in 2020. However, while it's still the wild, wild west for other cryptocurrency, Bitcoin appears to have crossed the Rubicon. In the 90 days prior to filming this episode, there were 112 S&P companies, or 22% of the S&P 500, with greater volatility than Bitcoin. Why might Bitcoin volatility be dropping? Because speculative money is being replaced by institutional money. The market capitalization of Bitcoin has reached nearly $500 billion as companies including MicroStrategy acquire over $1 billion in Bitcoin to hold indefinitely, or in Bitcoin parlance, HODL. And other companies are following suit. These new buyers are not only bringing down volatility, but adding legitimacy to the narrative of Bitcoin being a store of value. The second challenge to Bitcoin has no intrinsic value and isn't a means of payment, at least not yet. Economists provide or ask three functions of money. One, as a unit of account. Two, as a store of value. And three, as a means of payment. The reality is that no currency or asset can do all three things well. And there are trade-offs between security and functioning as a means of payment. Another criticism of Bitcoin, that the US government could ban its use. However, the IRS already includes it as a question on your tax return, and the SEC classifies it as property. Perhaps most importantly, the future of Bitcoin is not about what happens in the US, but about what happens in Europe, India, Brazil, and other major economies. It's also about people, specifically what people with means do with their wealth. One of our greatest geopolitical rivals, China, is also the second biggest foreign holder of US government debt. If China wanted to flex some geopolitical muscle, it could dump a stockpile of over $1 trillion in US treasuries, driving the US government's borrowing costs way up and crushing the US dollar. I'm investing in Bitcoin because I can afford to take the risk and I don't want to feel like an idiot if it goes to $100,000 this year, which I believe it has real potential to do. Bitcoin has the opportunity, could be the unregulated monopoly for money. For that potential, $500 billion seems inexpensive, considering there's over $300 trillion invested across bonds, stocks, and real estate. The world's current gold supply is valued at roughly $10 trillion. If Bitcoin were to replace gold as the world's safe haven asset of choice, Bitcoin's value would rise almost 20-fold, which is a great deal of upside. Prediction, Bitcoin will hit $50,000 sometime in 2021. At less than $1 trillion market capitalization, Bitcoin may be too risky for the biggest investors. However, with the potential to go to $1 trillion, it may be too risky not to be in Bitcoin. To be clear, this is a risky asset, and it may be that very soon, the easiest way to get a Bitcoin bull off your lawn may be to just pay for the pizza. We'll see you next week.